we're looking at the Dow really jumping here, up 142 points. You want to know what the swing is? At the worst point, the Dow was down 152. So nice move here up off the ground. This after President Trump said that he is postponing the, quote, scheduled attack of Iran tomorrow at the request of Middle East leaders from Qatar, UAE, and Saudi Arabia. So while the S&P is still down about 6 points, it is off the low. Same with the NASDAQ, off the lows of the session. NASDAQ is down 135 points. At its worst point, it was down 331 points. Joining us now, Gradient Investment Senior Portfolio Manager Keith Gangle. Keith, how do you even run money? How do you even invest in times like this? Give us the window into your world.
Yeah, it's certainly interesting times, and there's always market concerns and volatility, but recently it's certainly been a lot more than normal. If you go back a year ago, remember, it was tariffs. Markets sold off pretty aggressively. Now you got the Iran situation, but what we do as professional investors, we focus on company earnings, and they're fantastic. We're almost through Q1 earnings. 84% of the companies have beat. And if you look at guidance for this year for the S&P 500, we're looking for 18% EPS growth of those companies. That's fantastic, because normally you get 5 to 7. That's a good backdrop. But if we can do 18%, that's why the market's climbing higher and continue to grind higher as well. You like Palo Alto Networks, Amazon, Eaton Corp. Let's talk a bit about Amazon. That company is firing on all cylinders, and quite a few cylinders in different shapes and sizes. It's really just amazing. They are doing satellites. They are doing e-commerce, Amazon Web Services. They're building all kinds of things. And so what part of it do you like the most? Can you really be all things to all people? Yeah, I like a little bit of everything. I mean, obviously, last year, the stock actually struggled relative to the Mag 7. This year, it's finally finding its footing, and it's doing very well. You know, they got half their business is retail. So as the consumer's hanging in, I think the consumer is very resilient. So that's half of their business, I think, is in fantastic shape. But the more exciting part is the AWS business, which just grew 28% last quarter. That's driven by AI, the build out of their web services. We think that's a fantastic area. And like you said, they got a bunch of other shots on goal with the other services. But the area to focus on going forward, I think, will be the key driver is AWS going forward. Yeah, their market cap, I'm watching it closely, $2.8 trillion. You think it goes to $3 trillion? What would get it there? I do. I think last year was kind of a little bit of a struggle. The stock actually underperformed, and I think the fundamentals are in place. They had a really good quarter. The one thing that's holding it back is their CapEx spending on the AI kind of build out. So if they can get that under control, show a little bit more revenue upside, I think it certainly can get to $3 trillion plus. How are you absorbing all of the sort of headline shocks that come in every single day? Because of this war, because of social media, which President Trump uses very liberally to get his message out. It's really different, certainly, from past presidents, except his first term. So tell me, how closely do you watch that, or do you tune it all out? Yeah, no, we pay attention, but I think it's obviously a lot of it's noise. So again, if we'd, I've been doing this over 30 years, if we had to focus on one thing, it's that company earnings that I talked about earlier. It's if they can do 18% growth. I mean, these companies aren't seeing it. Obviously, on the edge they are. The one thing I am concerned about is the high oil prices. Above $100, like you mentioned earlier. That is a concern. The futures have it coming down, which I think it does come down. If it does come down, that's going to be even a bigger tailwind for the markets and kind of go higher. But there is a lot of noise to kind of sift through. But again, we tell our clients and investors to kind of ignore the noise and focus on company fundamentals. That's the long-term driver of companies. You've got a software company in there with Palo Alto Networks. I mean, it's cybersecurity, but the software sector has just gotten hammered. If you look over, I mean, today it's up. You've got IGV up about 1.25%, but it has been a rough road. This week we're getting ServiceNow, we're getting Intuit earnings. Can you just give me a sense of why you're not concerned that AI will basically obliterate software companies because it does what they do even better and more fast? Yeah, you're right. It is a game changer for a lot of software companies, but I think cybersecurity is where Palo Alto plays. That's an area that's differential. So I think Palo Alto, again, it's yet to be seen. I think they can fend off this AI, and AI is actually something that can actually complement their business and make it more sticky for enterprise. No one wants to be running a big IT company and then all of a sudden get cyber hacked. And if you invest with Palo Alto, cybersecurity, other names like CrowdStrike, Fortinet the other week. Gotcha. They actually put up good numbers, and I think this is a good space in the software. Now, again, other names, maybe not so much. You have to watch your Intuits of the world, your Adobes, your Salesforce. Those names may be under a little bit more pressure, but I like cybersecurity within software. Keith, my thanks to you.